Good day, everyone, and welcome to today's market fundamental breakdown with Tony FX. It's also a means for us to show you guys the market directions and our market forecast for the time period of 5th February till the 10th of February 2023. So if this is your first time, please like, share this content, comment below, and subscribe. Follow us on our social media platforms wherever you're connected, on Telegram, on LinkedIn, on Twitter, on Facebook, on YouTube. Subscribe. So my name is Anthony Phillips Njoko. I'm a certified professional trader for a Canada-based company, currently managing funds for different prop firms and different investors nationwide. So I have about 11 years of experience, and I am the founder of 10x Digital Lane. It's a platform where we teach people how to invest and also how to trade the digital trading market. So today we'll be going through our pairs for the week. We're starting off with DXY. So on DXY, we see the market created the last wave, which is this low, to grab liquidity. There was liquidity below here. So for those that are buyers that have their stop loss below here, market came there, grabbed this liquidity and spiked up. So on Friday, we had NFP. So this is the result of the NFP moving the market up, up, up. So currently, we have this downward trend, which is an inner trend on the 4 hours time frame, on the H4 time frame. So from here now, we expect market to do what? Give us a little bit of correction, but it could be a deeper correction or a minor correction, and then from here we can expect a swing more to the upside. That's what I see on DXY, because on DXY you can see that we have an inner trend line on H4 as well, which is this current trend line over here, which market needs to go up and fulfill some efficiencies and also validate that trend line. So from there we can be able to use this our volume of this up move, probably of this down move, because there is a market structure break below here. Exactly. So if we use market structure, we have swing high, swing low, so and place it down here, then the volume is going to give us a point of control. I think it's loading. I'm going to have a point of control. Let me delete that. I think it was not done. Okay, the market is not currently active. So from this point currently we have market structure, swing high. This was a swing high, swing low, and this is a swing high. And this is a swing high. So from this point now, we expect market to give us a little bit of correction over here before moving to the upside. That's what I expect. That's what I expect from so we have an MSB here. This is our MSB. This is it. H4 MSB. This is the break of structure. So if I'm to look for an origin, we have, like I told you guys, we could have a deeper correction. Markets might not have this deeper correction, but this is where we see our OB, our order block. So from here now, we can see markets come down to this point. That's why I needed this volume. Let's see, this is called the volume profile. Yes, to know the accurate point of control for this move. But it's not giving us any reaction here. Okay, that's new for the volume profile not to give us any reaction. So that's it for DXY. You could see it come down into deeper correction to this OB and then push the upside. So now we go down to Euro USD. On Euro USD, A lot of us took this trade on Friday at this point. We called out the sell trade at this point on Euro USD from this point, and the market shoots down. We made about 80 pips, bagged it, and we left the market for Friday. So diving into the new week, we have our validation point. This is an H4 validation point, which has not fulfilled efficiency. This is where we expect the market to come down to, but the market doesn't just go in one direction. It needs to have a structural movement. So from here, we have a swing high, swing low, swing high, swing low. We need to create another swing high, which is market structure. So from this swing high now, the same way we see on DXY, we should expect the next word swing low. This is my target for H4 validation points below this point. At this point, these are H4 validation points. So for me now, let's see if our volume profile is going to give us a reading we can work with. Okay, so from this point of this move down to this is a swing. Okay, so good, awesome. So we have our volume profile over here giving us a point of control, which is that we have to find our, this is not valid anymore. This is not valid anymore. That's fulfilled efficiency. So from here now, we can see there is another block here that market will come back to fulfill its efficiency. Exactly. So this is the other block, which is where we also have our what? Our target. So we should have our correction. We need a correction into this point. From this point, down starts getting these shots. So our point of control on the volume profile is exactly this point. So from here now, we can still go down to about 10 minutes or 5 minutes to refine this order block. But for me, this 15 minutes order block is extremely powerful and excellent. So from that point now, we expect market to come back into this point. Let me see if I can see any validation points there. H4 validation point there that needs to fulfill the efficiency as well. Okay, so on the validation points area, this is the last red, this is the last green candle on the H4, which is this. Okay, so this is the last green candle. On the volume profile, we already have our targets over here. Let me take this off. Okay, so over here we have our what? Our last red candle on the H4 where we have our other block where we need to fulfill efficiency. This is over here. So based on the volume profile, we're going to work with the volume profile. This is a deeper correction. Okay, wait. I need to mark out that H4 validation point. Yes, this is the updated H4 validation point on the bearish angle. All this over here, we don't need all this anymore. We don't need this anymore. Don't need this. We don't need this. This is where our main focus is now. And this H4 validation points, the bearish H4 validation point and the bullish H4 validation point, this is where our main focus is, and this is where our main attention will be. So for on the volume profile, volume profile told us that there is liquidity line inside it. This is where we can expect a reversal. Why on the higher time frame we have our H4 validation point, which is above this point. Above this point, you can see here we have a low point of control. This is a low point of control, but over here we have a high point of control. So there is high chances that market will have a correction, a minor correction, not a deep correction. Some people will expect this deep correction into this point here, which is where we have validation point. Some people expect this deep correction, but this deep correction might not come because we have a volume profile over here, which shows us a point of control with high volume. Then we can see a minor correction inside this point before we then expect what's the drop. I'm going to show you guys the day we expect this correction and the day we expect the drop. So this is for Euro USD. Then for AUD USD, Let's go to the higher time frame first. Yes, AUDUSD is a pair I expect a deeper correction. Yes, you expect a deeper correction in AUDUSD. I'll show you why I expect a deeper correction in AUDUSD. Come on, chat. Okay. This was where we took our trade on Thursday on AUDUSD. See, if you held that trade, if you held your trade from Thursday last week, this was about 203 pips moves till Friday. Powerful trade. Powerful trade. AUD. You are risking 15 to make 203. That's about 1:13 of your account. You've risked 1% of your account, so making 13% of your account on one single trade, just holding it for so long. So, but we just made 1:3 of our account. We are satisfied with that with proper risk management. So, this is the last red candle you can see here on H4, and you see we mark out the validation point, and the market is close to that point. Yes, this was the validation point we marked out last Sunday. The market came to it, but didn't break it. We saw the buy. The last push. This is the last wave to the upside for AUD USD. This is the last wave. From February, dollar is going to be massively strong. This February, dollar is going to be massively strong. So if you don't have dollar, hold some dollars. So this is it. Which is a safe asset though. Dollar bonds, 10-year bonds. Although this is not financial advice, so I'm just a speculator, I'm just an analyst. It's not financial advice. You need to do your own research. So this was the last wave of the last wave to the upside, the February wave that created the month of February high. This push up was used to create the high of February before giving you the bearish candle of February, which is going to be this down move you're seeing here. This is the first wave of the first wave for February. After this, we're going to see a deeper corrective structure, and this deeper corrective structure would be something similar to this. Yes. Let me look for the deeper corrective structure. Yes, something similar to this. I've seen it. It's not going to be organized, but our duty is to trade the impulse. Our duty, our job as a trader is to trade the impulse. Whenever the market wants to correct, the market creates an impulse before it corrects. Whenever the market wants to they have impulse and correction. Whenever the market wants to create another impulsive move, the market has to create it with a massive volume. So our job as traders now is to be able to identify when the market wants to create this corrective structure, and when the market wants to create this impulsive move, so you can be able to take the trades and make the profits. So for me and now, this is not valid anymore. That's fulfilled the efficiency and wiped out this zone. So the current zone we're currently in is a zone we marked out last week Sunday. So let us check the volume profile from this move. Let us know where the main liquidity lies. This is volume profile. Let's check it out. Awesome. So we now have a point of control. This is a point of control. And I told you guys we're going to have a deep correction. So let us take our Fibonacci from swing high to swing low. That's close to 62 Fibonacci points, which is around equilibrium. Discount is no, sorry. That is discount. Equilibrium is 50%. Then our point here is about here. So this is where we have. I'm still going to break down this zone. Let's go down to a smaller time frame, 15 minutes. Okay, so this was the move from NFP. This massive push to the downside was the move from NFP. So current market is inside a bullish H4 validation point. And for me and I to fulfill efficiency, definitely. So we're going to have our corrective structure. It's going to be a corrective structure from this point. Can make it about 15 and aim. No, It's about 1:8. 1:8. This is about a big move. But it's going to be a corrective structure. From here now, we're going to see what another impulsive move. But this structure going up might not be straightforward. It won't go just straight. It will be choppy. It will be a choppy move. Why? Because on Thursday, this was the move we saw on Thursday. We made this profit on Thursday. The market was meant to come and fulfill this imbalance and efficiency. There's an efficiency, a gap here that the market has not fulfilled. But the market never came back to this imbalance. It never came back to this efficiency. But that is bygone. The current efficiency that we need to fulfill currently, if let us trace it. Let's trace it. Let us find out the current efficiency the market needs to fulfill. So this green candle has fulfilled the efficiency over here. So let us go to this red candle. This red candle fulfilled the efficiency over here. The next candle. All this fulfilled the efficiency. Good. The next candle. What am I saying? So this is a green candle. And I can see there's a gap here. It never fulfilled this efficiency. This is the candle that I'm trying to show you guys. This candle. But I can see there is a wick here. This candle fulfilled this efficiency. But the last candle of the push is meant to be the final efficiency, which is this candle you're seeing over here, which is also where we have our point of control and point of interest now. So this is it. So all this over here, we're going to have a corrective structure. It's a corrective structure, and if you want, you can trade the corrective structure because it's going to be a deep corrective structure, or you can trade the next impulsive move to the downside from here. So it's now up to you. So the next on our list is US oil. Man, we just expect US oil to keep dropping. Why? Let me go to the H4. So what structure can you see on US oil? Over here on Sunday, we said we needed a correction and then a rise to the upside, but it never went to the upside. It went to the downside. So our target of $60 is still valid. We had a target of $60 pegged by Russia. So from the current structure I see, let us do it together. This is swing high, swing low, swing high, swing low, swing high, swing low. We need another swing high and then swing low. There is a H4 validation point here. That's where our target is meant to be. This one has fulfilled efficiency. This is expired. That's it for US oil. So the price of oil is going down, but you already know the type of world we have. When prices of things are going down, some people regulate, some people might not regulate. Mainly, I know for my country, Nigeria, nobody's going to regulate that. So that's for US oil. We're not going deeper. Why you're just checking out US oil is because the more the price of US oil is going up, the more inflation and depression is setting into the lives of people. But the when it's reducing, it's good. So this is gold. Exactly, gold trade. That's what you expected you to do last week into this validation point. It went into that H4 validation point, fulfilled efficiency, swept liquidity. This was liquidity sweep, grab. We saw in DXY. Gold did the same thing. After that, with this last wave, up wave, after this last wave, then this is the first wave of the first wave for the downside. So now we have this swing low, swing high, swing low. We need to create another swing high. Then before we go for the next swing low, dollar is getting stronger. So this is our validation point. It has fulfilled efficiency, and you see it's controlled in taking this market to the upside for gold. So we need to see where we can use this as our H4 M optimization zone, MOZ optimization zone. But if we can find a bearish order block validation point, no need for the optimization zone. So let's find it with the volume profile. Saves us more time. So good. So exactly, this is our volume profile, and this has marked out our validation points. And that's the last green candle there. That's our point of interest together with the volume profile. It gives us a much accurate point of control. Then I don't need this optimization zone anymore. It has expired. So what I need mainly is our validation points, H4 validation points and points of control. That's the two things I need. So where is that line? Yes. So this is our H4 validation point. Okay, and our point of control is meant to be this red line over here. And lower point of control. We have a lower point, and this is what a validation point too, which the market just came to sweep liquidity. From here, we can see some major reversals. This is it. This is a red candle, and the market broke it already. So from here now, where next? Okay, I can see this. This is the next point. This is a validation point that has not fulfilled efficiency, and market needs to come back into it. These are for gold traders. Why I don't trade gold most times, or why I don't send signals on gold, is because I have not learned proper risk management on gold. What my mentor taught me is that when I come to the charts, the first thing I do is I come to analyze. After I analyze, you do what? I apply proper risk management. So if I don't apply proper risk management, I cannot trade. So I need to learn how to apply proper risk management on gold before I'll be able to start trading gold. But for now, I just stick to Euro USD. So from gold, what we see is that at this point, we expect market to go into this zone where we have our point of control and our validation, H4 validation point. And then from here, we can see more push to the downside into this H4 bullish validation point. So that's what we see from gold. And then for Bitcoin, I analyze Bitcoin far back. So we use this volume profile to mark out this point. We expect a reversal on Bitcoin, but it broke that volume profile. We have an internal trend line liquidity, which is those people that buy on uptrends. The market just comes there and then swipes out their stop loss. So that is what I see. But currently, the market just broke this zone, and I think from here now a new structure is being formed. So you just the market is in control. Don't try to control the market. Follow the market. It is the river. You're just the seller on the river or the ocean. So this is what I think the structure I think the market is about to give us, because before my bias was if the market was meant to respect this point of control and also this order block, which you can see here, the last red candle before this massive push to the upside. See it here. Let me show you guys. This is the last red candle before this massive push to the upside that created this H4 market structure break to the upside. So I expect when markets come back into here and fulfill efficiency, we're going to see a spike to the upside back up to this zone to break this high. So from this breaking of this high, that's when I now expect what's the drop, the main drop. We're expecting Bitcoin to drop for sure. I'm expecting Bitcoin to drop, and when Bitcoin drops, I'm expecting to arrive at this uh uh equilibrium 50% point, which is about $20,193 per Bitcoin. That's what I expect it to. And if you can look here, we have what? An OB here, another block. This is what? Market structure break to the upside. Is it? This market structure break, MSB to the upside on H4. And then after that, what? The market needs to come back and fulfill efficiency. It has fulfilled this efficiency. And then this is the final efficiency. The market needs to come back and fulfill. This is why I expect Bitcoin to go to when I know this cryptocurrency is very highly volatile. So this is about $21,140 per Bitcoin. That's what we expect market to come back to. So based on the structure, it's creating a swing low, swing high, swing low, swing high situation. So after it creates the next swing high, then we'll be looking for the shorts into this point. And as soon as the market opens, because it has given us the same structure we see on currencies, currencies has a low already. So from here now, we can create what? A swing high, and then from there, we can then create the next swing low, which is going to be an impulsive move. So from here now, what we need to look out for now is our bearish order block. Let's look at the bearish order block. This is a green candle, the green candle. This is the last green candle I can see before that move. And what else can I see? This is a market structure break. This is a market structure break, which is going to do return to origin. And over here, has it broken this? It has not broken it yet. So this is mainly what I see now on BTC, because the structure I saw earlier on, it would have been a positive structure for a buy if that volume profile was not broken. But since the volume profile was broken, and that means the structure has changed. Thank you so much for being on today's Forex and market trading forecast. This is your trader Anthony Phillips Njoku. I'm just here to give you guys my insights, my forecast for the week ahead. I hope that this is something of value to you guys, and you should always try as much as possible to attend to this. Okay, let me show you guys when I expect all these moves to happen. Yeah, it's very, very important before I miss out. Thank you for the round of applause. Thank you for the round of applause. So today's date is, yes. So starting today is by 1:30 February 6th. That is tomorrow, Monday. AUD, we have a massive news by 1:30 a.m. But we won't be trading that. So Euro by 11 tomorrow morning, that's when we can expect Euro to gain momentum to the upside. So we're going to watch out for Euro tomorrow by 11 a.m. That is the start of a new H4 candle. We have New York session candle that starts by 7 a.m. and closes by 11 a.m. So that's new H4 candle that starts by 11 a.m. and closes by 3 p.m., which is going to also interfere into New York session. That is when we expect Euro towards gain some momentum. So by 11 or by 10, I'll jump on the chart, monitor the chart, get some trade setups, and if I see the signal, I send. So on Tuesday, GBP, I don't monitor GBP that much. Another news on AUD on Tuesday by 1:30 a.m. You could sacrifice to be awake by that time. But mainly on Tuesday by 2:30, I can see balance of trade on dollar and Powell speech. This day, Tuesday, could be a day that will push the market down. It could be a day that will push the market down. But let's not just confirm. Each day is going to handle itself. But based on the previous minus 61.5 billion and minus 68. Minus 68 is bigger, is negative, is much more negative than this, which means that the dollar is going to be weak based on this data. Dollar is going to be weak, but the final data is going to decide whether Euro USD is going to continue pushing down. AUD USD is going to continue pushing down on Tuesday. Then on Wednesday, if the push down doesn't happen on Tuesday, Euro will keep going up on Tuesday. By 10 a.m. we'll confirm that this information could push Euro to the upside by Wednesday, by 10 a.m. on Wednesday. Then on Thursday, yes, we have jobless claims. This is one of the news that gave dollar the momentum to push to the downside on Thursday. Yes, against AUD USD. Against AUD USD, we saw the jobless claims was a positive one, and AUD was weak on Thursday, massively weak against every other pair. It was the weakest. So we took the trade for a short AUD USD when we saw that the jobless claims on Thursday for USD was good. So we took the short. So this is a trade on Thursday. We can expect market to go to the downside. Speeches by the central bank of Euro Central Bank on Thursday as well. This one is in the evening by 7 p.m. But by Thursday, 2:30 p.m. West African time, we can expect yes, dollar to push the market impulsively down. And then we have the Mexican consumer sentiment on Friday to close the week by 4 p.m., which is the final push that we can also see in the market. So the push we're expecting from the market can come either on Tuesday, on Thursday, or Friday. The impulsive push we need to the downside. But me, my own mark, as I can see, is this Thursday. This Powell speech is going to be one of those fundamentals that is just going to be there. Thank you so much. I hope that this information really helps you out in this trading week. Please sign up for our signal, sign up for our educational platform to know how we trade.